Mm. I'm okay with I'm okay with the sums, except like few accounts when it comes. I don't know whether it is. I mean, like I don't know if to in the profit and loss account, some accounts are a bit hard. And also when I
Okay.
tried solving, always I need not get the amount tallying in both sides. So sometimes there's a problem like that.
Okay, so you have some problem with the profit and loss account and little bit with the balance sheet.
Yeah, like it should be tallied at the end, right? Always I'm not
Yeah.
getting.
Okay. Not a problem. All right, Shivana. So this is the chapter that we will be starting in today's session. This is as per our syllabus. This is chapter number 13. Prior to this chapter, we were discussing about the depreciation, and before that, we covered almost, I guess, almost 70-80% of the syllabus is already covered. Since you have all on your own completed 12 chapters, so you have a better idea that how many chapters are there and how much syllabus is already covered. So we are currently doing chapter number 13, final accounts. Before that, we already did 12 chapters. Anyways, let's start with the topic. And you can turn off your camera. Right. It is not mandatory to turn your camera on. All right, everyone. Ritika and Manisha. Hope both of you are also doing fine. All right, so guys, we will be starting this chapter. And we'll first of all talk about the basic concept of the final account, like the meaning of the final account, and what are the various statements that we need to prepare under the final account. And we'll try to discuss all the different kind of statement one by one. So let's first of all start with the meaning of final account. And yeah, everybody put the heading on your notebook, put the name of the chapter, final accounts, and in first, I mean, like, for the first 10-15 minutes, we'll be talking about the theoretical aspect of the final account, and then we will start with the numerical part. Okay, so first of all, let's talk about the meaning of the final account. Just a moment. So this is chapter number 14, final accounts. We'll first of all start with the meaning of final account. What is final account? So, final account can be defined as financial statements which are prepared after the formation of the trial balance. So it can be defined as it can be defined as the financial statements which are prepared after the formation of the trial balance. The final account is generally prepared after the trial balance. So what are the various statements that are covered under the final account? So as I wrote, it can be defined as financial statements. So what are the different statements that comes under the final account? There are three statements that comes under the final account. It includes final accounts include number one, trading account, then we prepare profit and loss account, profit and loss account, and it also include balance sheet. So all these three statements collectively called final accounts of the company, balance sheet. All right. So the objective of today's session will be to understand the trading account. We'll first of all talk about the trading account. We'll cover all these different statements, trading account, PNL, and balance sheet, but we'll cover these statement or account one by one, starting with the trading account. First of all, we'll have to explain what is actually a trading account. See, all these statements are different kind of statements, and every statement have different purpose. Every account has a different purpose. Trading account is prepared to determine the gross profit, and profit and loss account is determined is calculated to determine, it is prepared to determine the net profit or loss of the organization, and balance sheet shows the asset and liabilities of the company at the end of the year. So every statement or account have specific purpose. Talking about the trading account, we can write trading account is what? Trading account is we can say it is the first stage in the process of preparation of the final account, and it is a financial statement which shows the result of buying and selling of goods and services during an accounting period. All right. So trading account is a financial statement which shows the result of buying and selling of goods and services during an accounting period, and it is prepared to determine, show, or to calculate the gross profit earned or gross loss incurred by the organization during one accounting year. So let me write down the definition. Trading account is a financial statement all the direct expenses and income of an entity pertaining to one accounting year. It shows the result of buying and selling of goods or services during an accounting period. All right. So it is written that trading account is what? Trading account is one of the financial statement which is prepared under the final account. There record all the direct expenses and incomes of an organization in relation to generally it record all the direct expenses and income relation to in relation to you can say at factory level whatever the expenses that an organization has to incur at factory level all such kind of direct expenses and incomes are recorded in the trading account. In fact, let me write that down. Incomes at factory level will be recorded there in the trading account. All right. Apart from that, it also shows the result of buying and selling of goods and services during an accounting period. So, what do you mean by result? Result means basically it it shows the it shows the gross profit. It shows the gross profit or gross loss incurred by the entity by the organization in an accounting year. All right. So trading account is what? Trading account is one of the financial statement which is prepared while preparing the final account. What does it show? It shows all kind of direct income and expenses that are incurred or generated at factory level during an accounting period. It helps us to determine the gross profit or loss that company have generated in one accounting period. All right. Now let's talk about the format of the trading account. How do we actually prepare trading account? All right. And let's in fact first of all before the format of the trading account, I think we should first of all discuss what is direct expenses. So let's understand direct expense. Direct expenses. Direct expenses are those expenses which are incurred by the organization on the production of goods and services. Whatever the expenses that company have actually incurred on production of goods or directly incurred on rendering of any kind of services that are called direct expenses. So any expenses that has been incurred by the organization specifically in respect of the production of a particular good that will be considered as a direct expense. And all the direct expenses are recorded in the trading account. So all, just a minute, let me write that down. Direct expense, all those expenses which are incurred on production or purchase of goods. Goods means material, as in raw material. Purchase of goods till they are brought to the place of business. So all those expenses which are incurred in relation to the production or purchase of goods, till they are actually brought to the place of business or factory, will be considered as the direct expense. For example, let's suppose you don't have to write this down. Let's suppose there is a company XYZ Limited. All right, XYZ Limited have purchased raw material, and value of this raw material is assumed it is 50,000. Okay, and company have further spent 2,000 on its carriage. Company have further spent 1,000 on loading and unloading of this loading and unloading of raw material. All right. So whatever the expense that has been incurred on purchase of raw material, number one, plus bringing that raw material from the market to the factory, the expenses that has been incurred on transport, which is carriage, will also form part of the cost of raw material. And whatever the expenses that we have incurred on loading and unloading of the raw material to the truck and from the truck till it is brought to the factory is also considered as the part of cost of raw material. So the total cost of raw material will be 50 plus 2 plus 1, that will be 53,000. And since this is the expense incurred on purchase of material, therefore this expense will be considered as the direct expense. And since it is a direct expense, we will be recording that in the trading account. When we'll prepare the trading account, we have to record 53,000 in the trading account. Why? Because it is a direct expense. Sir, all of it is the direct expense, or the expense incurred on the purchase of raw material only will be considered as the direct expense. So answer is all of it will be considered as the direct expense, whether the amount that we have incurred on purchase of material, on carriage or loading, unloading, everything will form part of the cost of raw material. In fact, will be treated as the direct expense and will be recorded there in the trading account. Okay. So that is what I was telling you, that whatever the expense that has been incurred on purchase of material, number one, plus expenses incurred for bringing the good or material from the market to the factory will also become part of the direct expense. Okay. So all those expenses which are incurred on production or purchase of goods till they are brought to the place of business is are known as direct expense. Now, how do we treat direct expenses? Direct expenses are recorded on the debit side, debit side of the trading account of trading account. So, what are the different types of direct expenses? Could you please tell us few direct expenses? Yes. Direct
Wages
expenses
and salary.
include, yes, wages and salary is a direct expense, that is right. It includes, it includes, there are various expenses which comes under the direct expense, like as you said, wages, not salary. Wages is part of the basically direct expense, but salary, if it is only salary, then it forms part of the profit and loss account, because salary is treated as the indirect expense. But if it is given in the question that it is wages and salary, then it forms part of the trading account and treated as a direct expense. So yeah, that you are right. Wages and salary collectively is a direct expense. Then apart from this, apart from wages and salaries, we have other expenses as well, like expenses incurred on carriage. Carriage means for bringing the raw material from the market to the factory. That is called carriage inward. All right. So carriage inward will be considered as the direct expense. But when we sell goods to customer, and at that time we have to transport or spend amount on dispatching the goods from the company to the customer, that will be considered as the carriage outward. The carriage outward is not considered as a direct expense. Rather, it will be treated as an indirect expense. All right. Right now, we are just discussing about the carriage inward. Carriage inward means amount is spent on carriage on at the time of amount is spent on the transport at the time of purchase of goods, which is carriage inward that will be indicated in the trading account. Then we have if we have incurred expenses on like production in by way of power or fuel. So power and fuel expense will also be part of the direct expense. Why? Because as I told you, whatever the expenses that we incurred on production, specifically for the production of goods, that will also part of the direct expense. Then any expenses which are specifically related to factory, like factory electricity expense, factory rent, factory electricity, or anything specifically related to factory will be part of the direct expense. All right, then we have sometime on purchase of goods, purchase of raw material, we have to pay taxes that is considered as duty on purchases. So if we had paid any duty or any taxes or at the time of purchase of material, that will also be considered as the cost of uh, as a direct expense. Then if any other expenditure have incurred by way of like engine oil expense, cotton waste, oil and greasing kind of expense, that also form part of the direct expenses. So those are called in engine oil. These are very small expenses, but these are being incurred in the factory, therefore it form part of the direct expense. Engine oil, cotton waste, oiling and greasing, oiling and greasing, etc. These are all direct expenses. All right. I hope this is clear. Now let's talk about the format of the trading account. How do we actually prepare trading account? So I want all of you to note this down as well, because this will be very much useful while solving the questions.
So can I ask a doubt?
Yeah, sure.
So is power and fuel expenses also a collective one, or is it like separate?
Power and fuel. See, power and fuel will always fall under the trading account, because if it is written in the question that expenses has been incurred on power, power is basically related to machine, and machine is used in factory. Therefore, power and fuel will always comes under the trading account, even if it is given even if question gives you separately, like fuel is given separately and power is given separately, then also it comes under the trading account, because fuel and power both are related to factory usage. It is nowhere used in the like in office or in the sales department. So therefore, all kind of expenses which are specifically related to factory will be covered under the trading account.
Thank you, sir.
Okay, now let's talk about the format of the trading account. So this is how we prepare trading account. Normally, trading account. Okay, so the first thing that we write under the trading account is the opening stock if it is given in the question. If there is any opening stock that is already there in the question, then such opening stock need to be shown on the debit side of the trading account. This is the debit side. I'm sure all of you already know that debit and credit. So opening stock will be written first of all on the debit side. Opening stock, and then if any, if you have purchased more raw material, then it will also be reflected on the debit side of the trading account by the name of purchases. But purchases are always shown in the trading account after subtracting the uh, purchase return. I mean, like for example, if a company have purchased goods costing 50,000, but out of it, company have later because of some defect, because of some because of any reason, if company have returned raw material costing 10,000 out of it, then we will have to subtract it from 50,000, and whatever the net value that we will get, that net value of the purchase will only be reflected in the trading account. Like in our case, if we have purchased goods costing 50,000 and later we return raw material costing 10,000, in that case, net purchases will be 40,000. That will only be recorded in the purchase account. So that is what I was telling you, that purchase is always indicated in the trading account after subtracting the return purchase return. After subtracting the purchase return. Purchase return, students, this is also known as return outward. Alright, this is also known as return. Let me write it. Sometime in the question it is given by the name of return outward. Purchase return and return outward both are same. We will first of all write down purchases and subtract purchase return out of it, and whatever the value that we'll get, we will be writing the net value, net purchases on the debit side of the trading account. Then if company have spent on wages and salaries, then wages and salaries will also be recorded in the trading account on the debit side as well. You will notice that all the direct expenses, all the expenses, in fact, all the expenses relating to manufacturing or relating to purchase of goods is always shown on the debit side of the trading account. And all the inflows, all the incomes, you can say, is recorded on the credit side of the trading account. Okay, so wages and salary, because it is an expense, so we will be recording that on the debit side. If there are any other direct expenses like factory rent is there, factory electricity charges are there, then such direct expenses will also be shown on the debit side. If there are any other direct expenses like carriage inward is there, not carriage outward, only carriage inward, that will also be indicated here. All right, and apart from recording the expenses, we need to record the incomes as well. So when it comes to income, the first thing that we record in the trading account is the amount of sales that has incurred. So sales value by sales will always be shown on the credit side, but just like the purchases, like net value of the purchase is always written in the trading account now. Similarly, sometimes the goods that we sell to the customer, out of those goods, sometimes customer also returns some goods. Owing to any reason, there could be any possible reason, but if customer is returning goods, that need to be subtracted before writing the final value of the sales. Like for example, if the total sales that has taken place is 1,20,000, but out of the sales, customer have returned some goods. That is considered as the sales return. Sales return is always subtracted, like customer has returned goods costing 30,000. So this need to be subtracted, and the final net sales value will only be recorded in the credit column of the trading account. So that will be 90,000 only as per our exam. And yeah, one more thing, just like sales purchase return was known as return outward, right? So sales return is also known as return inward. This is called return inward. Sometimes it is given in the question by the name of return inward, so you don't have to be confused that what it is. It is basically sales return given by the name of return inward. All right, so I hope this is clear. Now moving on, sometimes company also realize some value by selling the, or you can say scraps. So if company have sold some scrap items and realize some amount by selling the scrap, that is also an income which need to be recorded on the credit side of the trading account as well. So by scrap sales, scrap sales, scrap sales will also be shown on the credit. Scrap sales is just like a income. Right. So this is it. Nothing much on the credit side of the trading account.
So,
After doing this, the yeah,
so do we also put the closing stock, right?
yeah, I'm going to write it. Okay. So after recording all these things, we will be writing the closing stock as well. If this is obviously that will be given in the question by closing the stock. Okay. And now we will compare the debit and credit column of the trading account. And if the credit part is greater than the debit, if the credit side of the trading account is greater than the debit side, if the credit side is greater, that means the inflows are greater than the outflow, incomes are greater than the expenses. That simply means we had a profit. We had profit in the trading account, which is recorded, which is shown on the debit side of the trading account by the name of to gross profit. To gross profit. All right. If credit side is greater than debit side, then we will have the gross profit. Sometime there may be a situation that debit side is more than the credit side. It simply means that we had suffered a loss, and that loss by gross loss will be shown on the credit side of the trading account by gross loss. This is when the debit side is greater than the credit. All right. And after doing all this, you need to ensure that when it comes to totaling both the sides, you must ensure that both the sides are tallying. Debit and credit side should tally. That means should have exactly same balance on both the sides. If you are not getting the same balance, that means you must have committed some mistake somewhere while preparing the trading account. All right. I hope this is clear, everyone. Anybody is having any doubt at this point?
No, sir.
No doubt. Okay, so let's do one thing. Let's do a quick question. Let's do a small question to understand the concept of trading account. Starting with the easy question. Okay, so we'll start with question number 3. One of the easiest question of the chapter. In fact, which is based on trading account. So this question is asking us to prepare the trading account from the transaction or the information given below. We have been provided with you items like the opening stock, purchase return is there, purchases are there, sales and sales return is there, closing stock, carriage inward, and depreciation is given. So considering all these items, we need to prepare the trading account, and we need to ensure that the item must be placed on the appropriate side of the trading account. Only then we will be able to determine the correct gross profit or loss for the organization. Okay, so just take a screenshot of this question so that you can refer back to the question whenever you want to revise. Can you take this screenshot quickly? And then we'll start with the solution. And everyone?
Done, sir.
Yes, sir.
So, trading account for this question. Question number. The first thing which is given in the question is opening stock. I'm sure all of you already know where to put this opening stock in the trading account. So on the debit side of the trading account, we'll write down to opening stock. Amount of opening stock was 23,000. Then we have purchases given in the question. Two purchases. Value of purchases is 29,000. But as I told you, this cannot write down the purchase value directly into the debit column of the trading account. Why? Because we need to subtract the purchase return if any given in the question. Like in this question, we are provided with the purchase return. So we need to subtract it. That's purchase return. Purchase returns is 2,400. Subtracting 2,400 out of 29,000. So 29,000 minus 100, we will be getting 26,600. This needs to be shown in the debit column of the trading account. After that, we have sales return and sales as well. Let's first of all write down the value of the sales by sales. Sales is given as 25,400. 25,400. We will subtract sales return out of it, which is also there in the question, 500. Okay. Subtracting 500 out of 25,400 will be 24,900. Then moving on to the next item, we have closing stock, and I guess you know that closing stock needs to be shown on the credit side of the trading account by closing stock. And the amount of closing stock is 47,700. All right. Then we have carriage inward. As I told you, carriage inward is an expense spent on the basically for bringing the goods from the market to the factory. It is a transportation expense. Carriage inward is of 100 rupees. Because it is an expense, we will be showing this on the debit side of the trading account to carriage. Okay. Then we have depreciation. Can any one of you please tell me on which side of the trading account we should write that down? The depreciation should be written on which side of the trading account? Anyone? On which side of the trading account?
Debit side.
Debit side. Why? Because it is an expense, right? Anyone else want to add anything in it? Ritika, Vanisha, Janet. What do you think? Ritika, what do you think? On which side of the trading account we should write that down?
Yeah, I think debit side too.
Debit side, and everyone have the same reason. Na? We will be writing that on the debit side because it is an expense. Okay, but here is an interesting point. Depreciation will not be recorded in the trading account, even though it is an expense. But trading account does not record all kind of expense. It record only direct expense. Depreciation is what? Depreciation is not a direct expense. Depreciation, even though it is incurred on asset, depreciation is charged on asset, plant, machinery. But in fact, that is an indirect expense that will be shown while preparing the profit and loss account on the debit side. So you will have to remember, you'll have to keep this in mind that depreciation is not a trading account item. It is not a direct expense. It is an indirect expense, and we will be treating this. We'll be recording that in the profit and loss, not in the trading account. So all of you are right in a sense that you have debited the depreciation on the debit side, considering that it is an expense. That is okay. But because it is an indirect expense, therefore we won't be recording it. So I guess everything is done. No more points are, no more item is left in the question. So now we can sum up this account and find out the gross profit and loss. Let's first look at total the credit part. As we can see on the credit side, we have 24,900 and 47,700. Let me total this. 24900 plus 47700. This is 72,600. And as far as I'm able to see, I think credit side is greater than the debit side. Okay, so let me write that down here. 72,600. And now we will debit side item out of it. 72,600 minus 23,000 minus 26,600 and minus 100. So the balancing amount is 22,900. So obviously credit side is greater than the debit side, so this will give us profit, which will be called gross profit. Gross profit 22,900. And now we will close this account by totaling the debit side of the account as well, which is 72,600. Got it, everyone? Is this clear to all of you? Anyone having any doubt? Done, everyone? Everybody done writing this? Vanisha, Ritika, Zen.
Yes, sir.
Okay. All right then. So this was the pretty basic question of this topic. Let's move to the next question. Somewhat difficult than this, not as difficult, but to be better than this question. So just a moment. So we'll talk about the question number 1. In this question also, we need to prepare the trading account, provided with so many items this time. Opening stock, purchase, sales, pages, carriage input, carriage output, manufacturing expense, purchase return, sales return, gas, fuel, power, dock charges, factory lighting, office lighting, closing stock. Okay, so I want all of you to try this first. I'll be showing you the correct solution of this question, but I want all of you to try this first on your own. If anyone having any difficulty solving anything at any point, I'll help you out. But I want all of you to try this.
Yes, sir.
All right, Tiona, Ritika, Vanisha, Janab, is that okay for everyone?
Yes, sir.
All right. Right. I want all of you to determine the gross profit loss for this section.
Sir, sir,
Yeah, sorry. Yeah, Manisha, please tell me.
so what is dock charges?
Dock charges relating to you can say this is shipping charge that we have to pay at the port, ship port, which is also called dock. So at the time when we purchase goods, when we buy goods by sorry, when we import goods and goods are imported by way of ship, at that time we have to pay dock charges at the ship port, which is called dock
Okay, sir.
charges. Then anybody have got the profit? Then I've mentioned.
So
Siona,
factory lighting
you
and
got the
office
gross profit.
lighting.
Sir, I'm getting gross loss.
You're getting gross loss. No, we have a profit situation in this question. Ratika, you were asking something? Yes. Anybody asking?
So
I'm
I'll
not able to
continue,
hear
right?
you. Yeah, sorry. Manisha, please tell me.
Yes, sir. So factory lighting and office lighting comes under direct or indirect expense.
Factory lighting is related to factory that comes under the trading. Office lighting is related to office expense, which comes under the profit and loss account. We'll talk about that when we prepare the P&L account. Right now, we are discussing trading account. So all office related expense, manufacturing related expense will be there in the trading account. So that means
Okay,
factory
sir.
lighting will be recorded in the trading account. Yes, Yona, you were raising your hand. So I guess you got the answer.
Sir, I got by gross loss the amount as 6,12,600, and the balancing amount I got as 13,90,000.
Okay. So just tell me the debit side items. First of
Okay.
all, you must have written opening stock 22,50,000.
Yes, I've written to opening stock 2,50,000. Then purchases after subtracting, I got 6,78,000.
That is right.
Then to carriage inwards, then to manufacturing expenses, then to gas, fuel, and power, to dock charges, to factory lighting.
Mhm.
After adding the debit side, I got
Okay, just a minute. Just a minute. Tell me what about wages? Have you written wages on the debit side as well?
no, because wages and salaries will come as direct expense, right?
No, I see. If wages and salaries were in question, we will write that in the trading account, number one. If it is wages only, then also it comes under the trading account. If it is salary and and wages collectively, salary and wages, that falls under the P&L account. It is an indirect expense. Number 3. Number 4, if it is only salary, then also it will fall under the P&L account. Let me, in fact, write that down just a minute. Let me show you. What I was saying, that if wages and salary, you see there in the question, are together, wages and salary, it is considered as the factory expense, so trading account. If there is only wages, then also trading account. If it is salaries only, then profit and loss account. If it is salaries and wages, then it is also office related expense, profit and loss. I hope this is clear now.
Yes.
Is it clear? Okay. So you need to add the wages as well on the debit side, number 1. Number 2, I think you also missed manufacturing expense. Manufacturing expense is there, 2,48,000. You wrote that in the trading account, no, na?
Yes, I've written it.
You have written it. So let me tell you what are the items that will be there on the debit side. Firstly, opening stock, then purchases, then wages, carriage inward, gas, fuel and power, dock charges, factory lighting, manufacturing expense. This is it. On the credit side,
So
we will have.
I got the answer.
Oh, yeah, okay. Manisha, tell me the answer.
So the gross profit is 8,65,000.
8,65,000 is not the right answer, Manisha.
So 8,65,000.
No. Okay, and anyone else is also the, yeah, Ratika?
So I got gross profit as 7,69,000.
Yes, that is right. 7,69,000 is the correct answer. Got it right. Well done. Okay, I was talking with Siona. Yeah, Siona, on the credit side of the trading account, we'll write down sales after subtracting return, which is 18 lakh minus 36,000. So that will be 17 lakh 64,000. And
Yes.
and nothing else is there apart from closing stock. Only closing stock is there, 6 lakh. So totaling 1764 plus 6 lakh, that will be 23 lakh 64,000. Right? And then
So,
you will
could
subtract
you
all.
could you repeat the
Mhm.
last what you said?
I said on the credit side, you'll add 17 lakh 64,000 plus 6 lakh. Totaling this, we will get 23 lakh 64,000. All right. And after that, we will subtract all the debit side item one by one. And at the end, we will have a gross profit 7,69,000. This is the correct solution, everyone, which I'm showing on screen. All of you may look at this, and this is the correct. You may also take the screenshot. If anyone having any difficulty understanding anything, let me know. Ritika already got the correct answer. So Vanisha and Zainab, is everything clear now?
Yes, sir.
Okay. All right then. So all right, everyone. So Ritika, Vanisha, Zainab, and Siana. This is it for today's session. I'm giving you 2 questions for the homework as well. All right, which will be related to the trading account only. And I want all of you to take a screenshot of the question quickly. Let me know once you are done. Okay. So question number 2 will be homework. An easy question. It is an easy question. You will surely be able to solve it.
Done, sir.
Done with the screenshot. And we have one more question. Question number 4. Take the screenshot. Done?
Yes, sir.
Done, everyone. Okay, let me check. So I don't think you will be able to do any more question of this chapter as of now, because we have to cover few more concepts like the cost of goods sold and few other things, and then only we'll be able to do the upcoming questions of the chapter. So this is it, everyone. This is it for today's session. I want all of you to revise the concept before attending the next class. All right. Okay, so this is it. Thank you so much.
Yes, sir.
We'll see you in the next session. Goodbye. Take care.
So could you tell the next days when the class is?
Next class will be on today is Tuesday, na? So we'll be conducting the next class on Thursday at same.
Okay, so is it Tuesday, Thursday, and Saturday?
Yeah, TTS classes will be conducted on alternate days basis. TTS Tuesday, Thursday, and Saturday.
So and also like, is this the last chapter you're doing, or is there few more chapters?
There are few more chapters left, like the rectification of error is there, and then basis of accounting is there. Few small topics and small chapters are still there, but more or less, in fact, I guess almost 80% of the syllabus is covered, including if we include this chapter, consider 80% of the syllabus is already covered. So if you have difficulty in any specific chapter, you can let me know. We'll try to arrange some separate sessions for you so that you can cover those topics.
Yes, so because my exam is starting on January 2nd, so just for that.
So not very much time left.